Hey everybody, this is Gregg Gossett from Gossett Trading and Mentoring, and today is Saturday, April 8th, 2023. I hope you're having a good weekend. Thank you so much for coming and visiting my weekend review podcast. In this podcast, this is going to be the format. First of all, we are going to run the U.S. legal disclaimer. Secondly, we're going to come back. We're going to take a look at all the positions that I have, both on the daily charts and the weekly charts. We're going to talk about when I entered them, specifically why I entered the trade, and most importantly, how I am going to manage the trade going forward. And it was a great week, had some nice winners, had a few losers too, which is to be expected. It's all part of the game, but I'll review all of those trades and my thinking and how I'm going to manage the trades going forward. After that, we are going to do a little bit on trader psychology. It's always the most important skill in trading, everyone. It really is the ability to create a plan and to follow the plan without letting your emotions get amplified and get you out of your process. It's always helpful for me to teach this, and hope it's helpful for you as well. I have a dog that I am She's trying to play fetch with me right now. Baby girl, we can't do it right now. I'm pet sitting a dog named Penny. This is my neighbor's, and I have been walking her since she was just about 10 weeks old, and she's a Malinois. And my gosh, is this an athletic, intense dog. I have had dogs my entire life, but boy, she keeps you on your toes. As a matter of fact, here is a picture. This was us last night. She is completely sleeping and she just wants to be as close to me as possible. And I just love having this dog in my home. And it's been a lot of fun. We've been going on walks, we've been doing all sorts of stuff, but she does not like if I take my attention away from her for 1 second. So I told her and asked her nicely. I said, "Listen, I have to do this podcast. You have to give me a little breathing room here." But I started laughing because she just came up to me with her little chew toy and said, "Let's play." And I was like, "I can't do it right now." So anyway, we're going to talk after we go through the trades, and we're going to talk about trader psychology. And like I said, it is the most important skill in trading. Basically, the ability to wait and be patient, and then once you're in the trade, follow the trade. So we'll do that. After that, I always like to highlight a poem from my friend Frank. Frank is a trading poet, in addition to being a great journalist and musician and great trader as well. But his trades or his poems always have some good insight pertinent to what's going on, and they always have a good message. After that, I have gone down through my master watch list and I have looked for some potential trades that I will be interested in both on the weekly time frames and the daily time frames for next week. Usually this part of the show, the price is not where I want it to be yet. It either has to go down, reject some kind of important level, or it has to go up and take out some potential important levels. So I've gone down through the master watch list and I have identified some potential trades that I'm looking for next week on the daily and the weekly. And so hopefully that's helpful for you to get an idea of how I look at the market, what the levels I'm looking at. And when it comes to trading, everyone, in general, you need to be patient. You need to have some kind of, if we're talking about the stock going down, looking for resistance to the downside, you need to see some rejection of a level. Then you need to position size correctly. You have to know exactly where your end of day stop is. You have to know where your maximum emergency stop is in case you're completely wrong. And I'll show you as we go through some of the trades, I'll show you how I position size and what the formula is that I position size. Then you put the trade on and you don't know what's going to happen, but you know exactly what you're going to do, whether it goes up, down, sideways, anything. You have your rules in place. You have these if-then statements. If it does this, then I'm going to do that. If it does that, then I'm going to do this. And that's really it. I wish we could control the market. It would be a whole lot easier, but unfortunately we can't. So we have to put together our best estimates. We have to look at the price action and where it was rejected. Uh, you know, Levels of rejection are important because it's telling you that, okay, the market doesn't want to go up higher over this, or it doesn't want to go down lower than this. And if you're getting long, that's a good area to do it. So you ideally look for that rejection of a level below you so that you have some support. I like to look at multiple time frames to make sure that both time frames are confirming my thesis. Position size, put the trade on, know where the end of day stop is, know where your emergency stop is, know where overhead resistance levels are. I like to take partial profits on the way up, but I'll show you all this. All right. So we're going to go through the daily candidates potentially for next week, and then also the weekly candidates for next week. By the way, weeklies bars close on Friday, and so for my weekly trades, I will not be making any decisions until Friday. So that is the plan, and that is the format for the show. So let's get started. I have to run the U.S. legal disclaimer. Hang tight. I'll be back in about 40 seconds. Thank you.
This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Please carefully read and/or listen to the U.S. government required disclaimer before watching this video or live stream broadcast. The video link and disclaimer text are located in the description section of this video or live broadcast, here and here. Thank you so much.
All right, let's get started. Okay, first on deck on the daily trades is Netflix. I did buy Netflix all the way back here on March 14th. Had a nice combination confluence of indicators lining up. The main reason I took this trade was because we had to close under the 300 and then close over the 300. We also went under 30 over 30, which is really great. And we also went under the negative third channel, over the negative third channel, which is also great. I did buy here at 294.20. I position size by taking my maximum allowed loss, dividing by the value of the 2 ATR. That way I know what my maximum allowed loss is. And then I put the emergency stop exactly 2 ATRs below. Now that's the emergency stop. End of day stop is, why did I get into the trade in the first place? I got into the trade in the first place, the main reason, because it went under the 300 and back over the 300. My end of day stop would simply be a close below the 300 SMA, which is the orange line. Now, on top of that, when I place a trade, I also put a 1.5 ATR trailing stop level above me. So when it gets to that level, then if I have a close below a previous bar's low, I will get out and sell half. It's just a precautionary measure. So that's the reason I took the trade. 294.20, it moved up. I always take partial profits. I take 10% of whatever shares I have remaining if it moves the value of 0.45 from my entry, and I always place 3 per day. The next day it moved up. I believe I hit 1 at least. Next day moved up, hit another, so I took some partial profits off. Got to trailing stop level, moved down, moved down, moved down, sideways, and then I had my first close below the previous bar's low, exactly where my entry was. Now, unfortunately or fortunately, I kept half, I sold half of the shares because that's what my rules tell me that I have to do. So luckily I kept half and it moved up strongly the next day, took some more profits off. Next day, took some more profits off, moved back down. Really went on a rally. Thursday, I had my first close below the 70 RSI, got out of half of the remaining shares, and then Friday or Thursday, because it was a abbreviated week, I had my first close below the 5 EMA, which is important. If I ever get to a 65 RSI and then close below the 5 EMA, that's it. I'm done for the trade. And so the remaining portion of the trade, I did get out with a 13.25% gain. So really nice gain. Bummer that I sold half down here, but I have to follow my rules. Had it gone down from there, I would have been really grateful that I sold half. So All right. And so this trade here, remaining shares up 13.25%. And I do want to mention here, in this podcast, I do my very best to show you what my rules are. They may not make sense to you. They may to some. But, I do my best to show you. I have a lot of different rules, and I believe that having these rules, especially on managing the trade while you're in it, are extremely important to your success. If you would like to know what these rules are like the back of your hand, I do offer private one-on-one lessons in the evening time via Skype. I love to teach. I will teach you all 5 of the different trading approaches that I use. It's a 15-hour course. Each session is 3 hours, and then we have 5 sessions. The cost is $1,750, but I promise it's worth every penny. It's an investment in yourself, and I have been trading for about 28 years, and I share with you everything I have learned and discovered and use in my trading, and I'll teach you step by step. So I'll speak more about it at the end of the podcast, but if you are interested, my email is in the link of this description. All you have to do is reach out to me, and I know you'll be happy if you decide to take the course. I know you will, because I've taught so many students around the world, and they've always been very ecstatic that they made decision to take the trade and to learn a skill. So keep that in mind. So, okay, Netflix up 13.25%. UAL, I did buy UAL back on, I don't know if you guys can hear her chewing. Bought this on the 27th of March with a simple close under the 200 and over 200. That was the main signal. On top of that, we have a confirming signal, which is a V2, bar 1, bar 2, bar 3. Bar 2 goes below the low of bar 1, closes above bar 1's close. So that was my entry signal. I position size by taking my maximum allowed loss, dividing it by the 2 ATR. That shows me how many shares to buy. And then right on top of that, I take exactly the value of the 2 ATR, place it below my entry. So that is my emergency stop. And so I've got my 2 stops in place. My emergency stop down here, which is at exactly 2 ATRs below my entry, and then my end of day stop, which is just the opposite of why I took the trade. Why did I take the trade? Because we had to close under the 200 and over the 200. End of day stop is a close under 200. Now, I just discussed placing a 1.5 ATR trailing stop level above, so it moved up. Nothing the next day. Did take some profits here. Next day moved up again. Did take some partial profits. Now got to trailing stop level. And then I'm looking for my first close below the previous bar's low. That happened here with the first close below the previous bar's low after reaching trailing stop level. That I locked in half at approximately 4.07%, which was nice. Then we came back down. Wednesday, we had another rejection of the 200, which was good for my long position. Had it closed under, I would have just gotten out of the trade, but it did hold. There were no more sellers down here. And, oh, sorry, that was 13.5. 13.5. Okay. And then currently, with the remaining shares that I have, up 2.02%. Yeah, sorry, that first one was a gain of 3.5%. And then currently, the remaining shares that I have, up 2.02%. Now, interestingly enough, I took this trade because it closed under 200, over 200, and the V2. Well, look what we have here again. We have another V2, bar 1, bar 2, bar 3. Bar 2 goes below bar 1's low and closes above bar 1's close. So this is a higher low V2, which is even better. I do, if you'd like to learn more about V1s, V2s, in my YouTube channel, I have a lessons playlist there, and I have a great video. It's totally free on V1s, V2s. I use V1s, V2s in so many of my trades. They're really my bread and butter, and so you might want to check that out. And the link's in the description as well. So currently, the remaining shares that I have are on UAL up 2.02%. DIA, this is another deep dip buy trading strategy. Why did I buy this? Well, notice the 200-day moving average, which is the black line. We closed above it, or closed below it, closed above it. That would have been a legitimate entry, but I didn't take it that day. I took it the next day where we went below the 200 and then closed above the 200. I position size, I place my emergency stop as always. If I had a close below the previous bar's low, I would have just gotten out. Up here, the orange line above 1.5 ATRs above my entry, it moved up straight up. I took partial profits. As always, I always sell a portion of my position into strength. Here on the 31st, we got to trailing stop level. Now I'm in trailing stop mode. Again, now at this point, I'm just waiting for a close below the previous bar's low. Has not happened. So as long as it stays, as long as we don't have a close below a previous bar's low, I'm still in the trade. If it moves up, I will continue to take partial profit. If it rejects the 70 RSI, I will get out of half of the position. And then if I have a close below a previous bar's low after rejecting the 70 RSI, then I will get out of all of the trade. All right. Again, just my rules that I use for my process. This is what I teach in my class, but just trying to kind of show you where I'm at now. So at this point, close below previous bar's low, I will get out of half. If we get up to a 65 RSI level, then the 5 EMA comes into play where I will get out of all. Alternatively, if it keeps moving up, rejects the 70, I will sell half of what I have remaining. And then after that happens, if I have a close below previous bar's low, I will get out of the rest of the trade. But this has been a really nice, great trade. It's a good example of showing this is up 3.27%. It's a good example of waiting for a level of support below to be rejected, position sizing, placing the emergency stop, having a close risk to reward ratio. Penny, no, come sit. Sorry, this has been a little challenging to do this because I have this super kid around here just wanting my attention, babe. Just up on the, nope, sorry. Sorry, everyone. Okay, now she's attacking me. All right, but it's a good example of looking for a level that got rejected, giving yourself a good risk to reward ratio, knowing what you're going to do, whether it goes up or down, honey. No, leave me alone, babe. Here we go. And so this position up 3.27%. Home Depot. Well, this was a great short that I had on Home Depot here back on the 4th of April. Why did I take it? Well, look, we have the 200-day moving average. The previous day we closed above and then we closed below, showing that there were at the moment at least, there was no more interest in buying above this level. In addition to that, we have a V1 to the downside. Remember, I was just talking about V1s, V2s. This is a V1 to the downside where we have bar 1, bar 2 goes above bar 1's high and then closes below bar 1's low. So we have a close over, close under the 200. We also have a V1 entry position to the downside. I did get short here, 295.10. I placed my emergency stop 2 ATRs above. My end of day stop would be a close above the 200-day moving average. And luckily it's gone my way. Went short here, 295.10. Next day moved down significantly, hit 2 profit targets, took 20%, locked in 20% profits. Thursday went down again, hit another profit target to the downside. So the market cannot take that away from me, and I'm mitigating my risk by taking risk off. Now it did move 1.5 ATRs from my entry downward. So now that's the orange line. Now I'm in trailing stop mode. So what does that mean? That means now in the future, if I have a close over a previous bar's high, I will lock in half. If it keeps moving down, then I will continue to take profits. This is a really nice trade so far. Started to work right away. Oops. This particular trade currently with 3 remaining shares up 2.25%. Okay. Caterpillar. Well, Caterpillar didn't work out so great. I really liked this trade. It was a great setup. I bought it on the 5th of April where we came down, we bounced at the 200, giving me a good risk to reward ratio. So I got long at 212.10. I placed my emergency stop 2 ATRs below my entry. In addition to the bounce at the 200, we have this nice double bottom with bullish divergence. Here's a low, deep red MACD bar showing a lot of selling momentum. Here we got to the equal low, but not much red. Actually, at the time, there wasn't any red at all, showing that the selling momentum is starting to wane. So the double bottom, bullish divergence, and the bounce at the 200, position size, emergency stop here, end of day stop, simply a close below the 200. And that happened, unfortunately, on Friday. Caterpillar did not participate in the rally, which I thought was quite rude, actually. But we closed under the 200. I am out of the trade for a loss of 1.49%. All right. Now, next week, if we close back above the 200, I would be interested in getting back in Caterpillar because now we still have this double bottom bullish divergence, but a close back over the 200, I would be interested in getting in the trade again, and I'll share that with you when we go through the potentials for next week. All right, here we go. Verizon, I did enter short Verizon on Thursday. Why did I do that? Well, look, we went above the 200 and then closed below it. All right. And if we look at the weekly time frame, do you see how we just almost rejected the 1 ATR channel on the weekly? I like to look at multiple time frames to see if we bumping, especially for short, if we're bumping into some resistance. And yes, we are bumping into some resistance at the 1 ATR on the weekly. On the daily, taking the trade with the intraday rejection of the 200. Now, I got short at 39.48, exactly where it is. I placed my emergency stop 2 ATRs above my end of day stop because this is the short is simply a close over the 200. I don't know if it's going to go straight down. I don't know if it's going to go straight up, but I do know where my emergency level is, and I'll know exactly how much I'm going to lose if it gets there. Only about 5% of the time will I lose the maximum allowed loss. Just any close above the 200 would get me out of the trade. And let me show you exactly how I position size. So it's based upon your the total capital in your account. Let's just go with a hypothetical $100,000 trading account. $100,000 trading account times 1% is $1,000. If you have a $50,000 trading account, then your maximum allowed loss would be $500 and so forth. So $100,000 hypothetical trading capital times 1% is, so we'll just do it, 100,000 times 0.01, $1,000, right? So $1,000, I take into account what the value of the 2 ATR is, 114. So I take that $1,000 divided by, 1.14. That tells me to short 877 shares. Now, once I find the entry, the reason for the entry, my position size, right? With the math I just told you, 188.7 or 877. Then I place my emergency stop exactly what the 2 ATR is, which is 114. Place that above. So if 877 shares move up $1.14, then I lose that $1,000, right? But 95% of the time, I will not hit that. It will just be a smaller loss with that. So if it just barely closes above Monday, just above the 200, then I will get out for a smaller loss. Now, if it moves my way, I have placed my trailing stop level exactly the value of 1.5 ATRs below my entry. And if it gets there, I will get into trailing stop mode to the downside. So that's the plan. I like it. I know exactly where I'm going to get out if I'm wrong, which is just a close over the 200. If it moves down, I will take partial profits. If it gets to my trailing stop level, then I will go into trailing stop mode. And so I'm exactly even on this trade at the moment. All right. So just a quick recap. Netflix remaining shares exited for a gain of 13.25%. UAL current remaining shares up 2.02%. Diamonds up current shares remaining up 3.27%. Home Depot, the short, up 2.25%. Caterpillar locked in a loss of 1.49%. and Verizon totally even on the trade. All right, let's go to weekly trades now. All right, here we go. Weekly trades. I did buy AMD back here on the 24th of February. We had a big move up above the 200. Then we came back down and tested it. I got long here 77.20. I position size. I placed my emergency stop 2 ATRs below. My end of week stop would have simply been a close below the 200. It did not happen. As it moves up, I'm taking partial profits, got to my trailing stop level, which means now I'm in trailing stop mode. I did get the reading on the RSI near the highs here was above 65, so the 5 EMA comes into play, meaning that if I have a close below the 5 EMA, I just get completely out of the trade, and that did happen. The 5 EMA currently 92.65, and we closed at 92.48, so that was a close below the 5 EMA. So I did exit the entire position on AMD for a really nice gain of 16.53%. All right, UNG, oh boy, this has been the worst trade in a while, but I want to point out that regardless of what your percentage gains and losses are on a trade, if you've position size hitting your emergency stop, you're still only going to lose that 1%. So it could move to, you could hit your emergency stop, which is 2% down, and lose your hypothetical $1,000. Or in this case, this one is down 31.2%. I had some people say, "Did you lose 31% of your money?" I was like, "No," right? Even if I got to my maximum allowed loss, I would still only lose the $1,000 regardless of what the percentage move up or down is. So let's get into why I took the trade. I took the trade back here on the 24th of February, had a intra week under 30, back over 30. Also had a V1 entry, bar 1, bar 2. Bar 2 goes below bar 1's low, closes above bar 1's close. And we also had a close below and then above the negative third ATR channel. Really great setup. Perfect setup, actually. Bought at 849. Next week, we moved up. Thankfully, I take partial profits when I do have some gains. When the market has some gains for me, it moves the value of 0.45 ATR. I take off half. And this is a perfect example of why that was a great idea, because I took 10% of my position off at a profitable level so that if it does move down, which it certainly did, it mitigates the loss down. Does that make sense? And it just has moved straight down. It didn't get to my it didn't get to my emergency stop. And had it, I would have only lost that hypothetical $1,000, right? But it did close. The reason I took the trade, the main reason was the under 30 over 30, which I took, but you can see it did close at 29.32, so it closed under my trigger, or why I took the trade, which is an under 30 over 30. So big loss on this one, 31.20. Big from a percentage perspective, but from a total capital loss, not large at all, because I position size correctly based upon volatility. So this did close under the 30 RSI, 29.32, so I'm out. The remaining shares loss of 31.20%. Tesla. All right. I bought Tesla at 173 even with this bounce or intra-week bounce at the 200-day moving average. Bought at 173. I position size, place my emergency stop. My end of week stop is simply a close below the 200. I place my 1.5 ATR trailing stop level above. So got here along 173. Next week moved up. Didn't move up enough for a profit target. Next week moved up. Did take 10% of the position off into the strength. Next week moved up again. Took a partial profits with the move up. And then you can see we did not get to my 1.5 ATR trailing stop level, so the trailing stop level does not come into effect. We are still above the 200-week moving average. As long as it stays there, I will stay in this trade. If we get a close below the 200, then I am out of the trade. So I know exactly what's happening. If we move up, then I'll continue to take partial profits. If we move up to trailing stop level, then I'll go into trailing stop mode. If it closes below the 200, I will simply get out. But nonetheless, the trade is still profitable. The remaining shares up 6.21%. IWM. All right, I have been in this one for a long time. I entered IWM all the way back here on October 14th. Intra-week rejection of the 300-day moving average. I got long at 167.19. I placed my emergency stop 2 ATRs below. If I have a close below the 300, I will get out of the trade. I placed my 1.5 ATR trailing stop level above. Next week, moved up, took partial profits. Next week, moved up, took partial profits. Got to trailing stop level. Now I'm just looking for a close below the previous bar's low. If it heads down, if it heads up like it did, take more partial profits. Here was the first close below the low. Got out at 178.70 on half. And it looks like that was a gain of about 6.65% on the half. Came back down, held the 300 SMA, had a huge move up again, took partial profits into this, took some partial profits here, took some partial profits there, took some partial profits there, took a lot of partial profits there. So this is the offensive part of trading. The defensive is your emergency stops, your end-of-day stops, your trailing stops. The offensive part is selling into strength when the market gives it to you, and I sold into a lot of strength. Obviously, then we came back down. We did hold the 300-week moving average, so I am still in the trade. If it closes below the 300, that's where I'll exit. If it continues up, I will continue to take partial profits until we get to a 65 RSI level, and if we do, then the 5 EMA will come into play. But the remaining shares that I have on IWM up 4.07%. This has been a really great example of showing you why it's important to take partial profits when you have them, using trailing stops. But that 300 has held. As long as it holds, I will stay bullish IWM. So up 4.07%. XLF, all right, another weekly trade. I took XLF back here on the 24th of March with a bounce at the 200-week moving average. Got long 30.71, position size correctly, placed my emergency stops 2 ATRs below. Where do I get out if I'm wrong on the end of week stop? Well, I bought it because of the bounce at the 250, so therefore if I have a close below the 250, I will simply get out. Next week moved up, took some partial profits, took those profits off the table, locked them in. The market can't take them away from me. Just a portion, 10%. Orange line here, 1.5 ATR trailing stop level above my entry. If and when I get there, then I'll go into trailing stop mode, or in other words, if I get a close below the previous bar's low, I am out. And this particular trade so far, working out pretty good, up 4.07%. All right. Last but not least, Boeing. I did take a short position on Boeing on Friday, and this is a good example. It's a textbook perfect short, and I'll explain why. First of all, we got very close to rejecting the 200. Didn't get quite there, but we have a lower high V1. Do you see here is bar 1? Bar 2 goes above bar 1's high and then closes below bar 1's low. That is a V1 entry signal to the downside. Now, more importantly than that, it comes from a lower high. Do you see how this high here was lower than our high over here? I like to short everyone when I get a lower high. Conversely, I like to go long if I get a higher low. Lower low, yes, you can get them, you can trade them, but they usually bounce and then fail. Trying to short a higher high, you can short, it usually goes down and then bounces. But lower highs on a short tend to trend down. Higher lows on a long tend to trend up, and that's what we're looking for. We're looking for those long trends. So did get short here at 212.40 on Thursday, placed my emergency stops 2 ATRs above, and my end of day stop simply, or end of week stop in this case, simply a close over the 200. And if we do the math, it's exactly the same doing it for weekly for the daily. You're going to have a lot fewer shares because there's a lot more range on a weekly. But let's take that hypothetical $100,000 account times 1%, $1,000, divided by the value of the 2 ATR, in this case 2707. Tell me to buy 36.9 shares or only 30, basically round up to 37. Well, if I have 37 shares and it moves 2707, see, there's the $1,000. And that's the emergency stop all the way up here at 237.80. Is it likely to get up there? No. Is it more likely to close above the 200? Absolutely. But in case it does go rocketing up for whatever reason, we have to have that emergency stop. But more than likely, if I'm wrong, it will just close above the 200-week moving average and I will get out. That's if everything goes wrong. If I'm right and it goes down, I will continue to take partial profits. If I get to trailing stop mode, I will go into trailing stop mode. And in trailing stop mode on a short is just simply a close above a previous bar's high, get out of half. We do have earnings over here on the 25th of April. I never hold through earnings. It's a good way to make a lot of money quickly, but it's also a good way to lose a lot of money quickly. And as traders, our number one responsibility is managing risk. So holding through earnings, in my opinion, is putting yourself into harm's way. So I did get short here, 212.40. It's 211.73. And so far, this particular trade up 0.48%. So that is a review, just a quick recap. AMD out of the trade for a gain of 16.53%. UNG out of the trade for a loss of 31.2%. Tesla still in the trade with a gain of 6.21%. IWM still in the trade with a gain of 4.07%. XLF still in the position with a gain of 4.0%. And BA just initiated that trade on Thursday, currently gain of 0.48%. Okay. All right, let's get over to a little trader psychology. This is from Money Trade Edge, Better Thinking, Better Trading. One of my favorite Twitter channels, always has great information on trader psychology. Please follow Money Trade Edge, Better Thinking, Better Trading. You'll be glad you did. Great information. Let's see what they have to say about trading psychology. Don't force trades. Wait for your setup. Wait for your setups. Trading is 20% execution, 80% waiting. Be a sniper, not a machine gunner. In your trading, how important is waiting? Do you think about it? Is it something that you're aware of? I need to wait for these trades. That's where you make the money, everyone. You make the money in waiting. Everyone talks about execution. Yes, right? Where we get in, where we get out. Yeah, all that stuff's important. But what is the most important is waiting and being patient for your trade setup to get to the level where you want to enter it. When we look at the potential trades for next week, you're going to see that where the price is now is not probably even very close to where I want to buy it. I mark the level where I want to buy it, and if it gets there, then fantastic. I will take the trade with the proper position sizing and all my rules, right? But if it doesn't get there, then I'm not interested. If you will just identify a level where it's not at yet, but if it gets there, if you will identify that level, you will be amazed how much better your trading is going to be, whether that's monthly bars, weekly bars, daily bars, and day trading, intraday. I day trade every single day. And what I like to do, whether it's a 5-minute chart or a 25-minute chart, whatever, I look for the level and go, okay, this is the level. Is it there yet? No, it's not. So do I do anything? No, I don't until it gets to that level. And if it never gets to that level, I just don't take the trade. So this is, dovetails with what Money Trade Edge is saying here. Don't force trades. Wait for your setups. Trading is 20% execution. That's the entering and the exiting and the managing. And 80% waiting. Think about it. Is 80% of your trading waiting? If it's not, I would recommend that you start doing that. It's going to increase your profit and loss. It's going to improve your trading. Think about it this coming week. Play the waiting game more instead of the execution game. Be a sniper, not a machine gunner. I completely agree. Thank you very much, Money Trade Edge. Better thinking, better trading. Follow them on Twitter. All right, let's do a quick poem from Frank. You can follow Frank at FrankOD over on Twitter. Love his poems. Today's market poem: no trade comes with a must. That's true. Stocks can rise with wind or dive in a gust. Even the best setup in time can begin to rust. That's why traders rely on a process they can trust. And what I like about Frank's poems is he always talks about process. Process is that's all you have in trading is a good process using good trading fundamentals. Position sizing. Where's that emergency stop? Where are the levels being rejected? Where your end of day stop? Where's your overhead resistance levels? Are you taking partial profits? What's your trailing process, right? You need that. Then that's what I teach in my private one-on-one lessons. I teach you everything ad nauseum, step by step. So keep that in mind. Hope you consider it because I know you're going to be glad you did. Let's read it one more time. No trade comes with the must. And that's what I teach my students. Even if you have, I'm a huge proponent of looking for multiple signals, multiple entry signals, confluences, combinations of signals, ideally on multiple time frames. But just if you get the best trade up in the world, it has 5 entry signals on the daily, it has 4 entry signals on the weekly. It still doesn't mean it can win. It doesn't have to win, right? And sometimes the better the signals, people get a little bit stuck in the trade and go, well, such a good signal, I'm going to hold on a little bit. No, doesn't matter how good the signal is. If your end of day stop comes into play, you just get out. That's all there is to it. So no trade comes with a must. There's not one trade that has to work. Stocks can rise with the wind or dive in a gust. Even the best setups in time can begin to rest. It's true. They can go south. That's why traders rely on a process they can trust. Isn't that great? And it's so full of wisdom. Appreciate that, Frank. Please follow Frank over at FrancoD. All right, let's take a look at some potentials for next week. Like I mentioned, just because I have these here doesn't mean I'm going to take the trade yet, right? This is AMD. Of course, I took AMD on the weekly. I did get out with a close below the 5 EMA, but looking for a new trade on the daily, well, look, here's the 300 SMA on the daily. Let's move this line down here to the 300. I'm going to turn that into a green line because what I want to do is I want to look at the higher time frame and see if that level dovetails with anything that I'm interested in, right? 300-day moving average would make a lot of sense right here at about 86.70. If I take a look at the weekly and I look where that green bar is, where is that? Does that show any kind of support? The 300 on the daily, does it show any support on the weekly? Not perfect, but it does now. That level has the support of the 1 ATR channel above it. We're above the 1 ATR channel, meaning that it is support underneath us. It doesn't dovetail perfectly, but pretty good. And it's right in the kind of section of middle of this halfway up bar. So yeah, I like it on the weekly. Next week, if AMD does get to the 300 moving average, if it closes under, I won't be interested. If it closes under and then closes over with a decent risk to reward ratio, yes, then I will take the trade. Alternatively, if we have an intra-bar rejection of the 300, meaning that during the day it goes below the 300 and then closes back above, that would also be a signal. Or if it comes and just bounces at the 300, I would be interested in. So this gets back to patience. Yeah, I'm interested in buying AMD if and only if it rejects that 300. If it moves up, then great. If it moves down, closes below, then I knew that 300 did not act as valid support. But if it does bounce intraday, reject, or close under, close over, I will buy AMD. I really like this setup, and I like on the weekly how it has, sorry, yeah, how it has the one ATR channel below it. Sorry, I'm trying to keep my focus here, but my doggy over here, she is not having it. She is not having it without 100% of the attention on her. Babe, you know what? You gotta just, yeah, how about we go sleepy sleep for a little bit? Hmm? Maybe a little sleepy sleep. Mwah. Love this doggy. All right, so AMD looking for a rejection of some type of rejection of the 300 next week. Caterpillar. All right, I did take Caterpillar on Wednesday, 2/12/10. Had to get out yesterday for a loss of, or Thursday for a loss of 1.49%. However, look, we still have this beautiful double bottom and bullish divergence. Here's the low, deep red MACD bars. We rally into green. Now we come back lower. We are now lower than this low, but look at the red MACD bars, not as low. This is saying that from a MACD perspective that we are running out of sellers. Two alternatives here. If we go down lower and reject the 30 RSI, that will be one potential entry signal for me next week. However, if we move up and close above the 200, that's another signal for me, showing that we've rejected the price underneath the 200. So I really feel like one way or the other, I will be getting into Caterpillar next week. Again, if we go down, reject the 30 RSI, I will take it, especially in light that we have this double bottom bullish divergence going on. So if it goes down, rejects the 30 RSI, that would get me long Caterpillar. Alternatively, if we close above the 200-day moving average, that would also get me long Caterpillar. Etsy. Okay, well, Etsy is also working on a double bottom bullish divergence. We have the low here, deep red MACD bars. If we come down, test this low, you can see if we come down, test this low, there will not be as deep of red MACD bars showing again that there's a loss of sellers, or the seller momentum is slowing. So I love double bottoms, bullish divergences. I studied one-on-one with Dr. Alexander Elder, taught me this. They don't happen very often, but when they do happen, boy, they're good. So on the daily, I am looking for a under 30, over 30. Alternatively, I could get a higher low V1. Again, this is something that I teach in my class. Here we have bar 1, bar 2. Bar 2 goes below bar 1's close. This is only valid for Monday. If Monday, let's see, the close here is 105.27. So let me change that. 105.27. Now, again, this is only for Monday, but if Monday we close above 105.27, that will be a higher low V2. We closed below the value zone. We rallied into the value zone. We never closed above the value zone. We've pulled back. So really two ways on this on Etsy. One, if we head down under 30, over 30, I get long. Alternatively, if we move up on Monday only and close above 105.27, then I have a higher low V2. So that's what I'm looking for on Etsy. Morgan Stanley. A lot of potential double bottoms, bullish divergences forming here. Here we have this previous low back here on 324. If we can get down to this low and test that low, then we'll have a double bottom bullish divergence again. Look at the move down. Look at deep red MACD bars showing a lot of downward momentum. We rallied into green. If we can come back down here, test this low, at the current time, there's not any red whatsoever, so it would be a double bottom bullish divergence. Now, I'm not going to just buy something because it has a double bottom bullish divergence. I need a entry trigger. The entry trigger would be an under 30, over 30, and I think that would be a really good spot to buy Morgan Stanley. So just to be clear, if we go down next week, close under 30, go under 30, and then back over 30, either day-to-day or intraday, I would get long Morgan Stanley because it's double bottom bullish divergence. Rio Tinto. All right. Well, Rio Tinto is setting up for a potential return to value V1, V2. And if you want more information on this in the description of this video, I have a link. It's totally free to my YouTube lesson on V1s, return to value V1s, V2s. Return to value V1s, V2s, one of my favorite signals. The first rule is we have to close above the 1 ATR channel. We did this back on the 31st of March. Then we have to come back into the value zone. You can see we're in the value zone. That's between this green line and this green line. Then we have to have 2 days of sideways motion. Well, here's one day. This didn't close below this low. This didn't close below this low. So we were above the value zone. We came into the value zone. We've had 2 days of sideways motion. Now I'm looking for a V1 or a V2 to the upside. The more sideways motion, the better. But right now it is valid. So for instance, on Monday, if we went below this low and then closed back above that high, that would be a return to value V1, V2, or V1. Potentially we could have a V2 as well. A little hard to explain just on this chart, but watch that video. I have a lot of great examples in there, but haven't had a lot of return to value V1s, V2s in the recent history, but this would be great, and they're one of my favorite ones. So it was closed above the value zone, came into the value zone, just get some sideways motion. The longer, the better. V1, V2 would get me interested in taking Rio. Entered XLE. Okay, well, nice trade with the close under 200, over 200. Worked out well. Didn't take that trade, but look, I like the 200 next week. If it comes back down here, is it going to? I have no idea, but that is a strong level of support there. I drew the line at the 200 on the daily, so let's look at the weekly, see where that dovetails. Dovetails perfectly with support on the weekly. See how those two time frames are interchangeable? There is support on the weekly at the 200. That's the green line. Looking at the weekly, where does that green line on the daily fall? On the 50. So it makes a lot of sense. But this goes back to patience, everyone. If we have a bounce at the 200, if we have an intraday rejection of the 200, if we have a close under, close back over the 200, I will get long because it makes sense from a level on a daily, and it makes sense from a level on a weekly with the 50. But if it never gets there, I just don't take the trade, right? That goes back to the patience. So real quick recap, AMD, would love to get in AMD if we have some kind of rejection of the 300 next week on the daily. Caterpillar, two options. If it goes lower, rejects the 30 RSI, I would get long there. Alternatively, if it closes back above the 200, I would get long there, especially in light that we have this beautiful double bottom bullish divergence. Etsy, looking for a under 30, over 30, which would dovetail with the double bottom bullish divergence. So under 30, over 30, or alternatively, if we go up and we close above 105.27, that would also get me along with the higher low V2. Morgan Stanley, looking for it to move down, under 30, over 30 with the double bottom bullish divergence. Rio Tinto, we're working on a return to value, just looking for a V1 or V2 as the entry. And XLE, looking for a pullback and some kind of rejection bounce at the 200. All right, so those are the dailies. Let's switch over to the weeklies. Again, weekly bars close on Friday. So I'm not going to do anything until Friday on these weeklies. Let's take a look, see what I have found. Okay, well, look at AGQ. AGQ is double leveraged silver. Straight down, straight up. I'm always fascinated by nobody wants it, nobody wants it, nobody wants it. Wait, change my mind. Everybody wants it, everybody wants it, everybody wants it. Well, look, this 200-week moving average above will act as some kind of resistance, right? That's a major level. If it breaks out above there, then we may go higher. But right now, that looks like a fairly decent place to short if it gets there. Now, I've been talking about double bottoms, bullish divergences. This is the opposite. This is a double top bearish divergence. Look here. Here we have this high. You see how high these green bars are? This indicates a lot of upward momentum. Then we pull back, go red, which we have to. Now look, we are back up challenging these highs again. But look at the height of the green. See how it's very low compared to these? This is showing that you're running out of sellers from a MACD perspective, right? I showed you a lot of the bullish ones with the bullish divergences running out of sellers. This shows me that we are, from a MACD perspective, running out of buyers. So the implication is it will probably head down. But I need a level to be rejected. The level is the 200-week moving average, 3460. I drew the line. Let's look at the higher time frame and see where that dovetails. Well, this is very similar to the nice Home Depot short that I had. Look, you have all this resistance here of the 50 EMA, the 100, and the 50. This makes sense. And there's a huge gap here as well, which would be known for filling that gap and moving back down. So on the weekly, what I'm looking for next week is some kind of bump up to the 200 and fail, or go above the 200 and fail. That would be my short on AGQ. I would position size, place my emergency stop. How far? Exactly 2 ATRs above, and then my end of day stop would be a close over the 200-week moving average. If it goes my way, it goes down, start to take partial profits. Etsy, I talked about Etsy on the daily as well, but look, there's also a nice trade here, potential to the downside on Etsy at the 300-week moving average. And look, if we go back in time, Penny, no, we cannot play throw the ring thing right now. She thinks this is the most important time for me to throw. Honey, baby, no, please. Let me get through the podcast, honey. Ah, okay. No, no, no. Come on, up, honey. There you go. Oh, sorry, everyone. The difficulty rating on this podcast today is insane. Okay. I'll be with you in a minute, babe. Now, looking back in time, was the 300-week level respected? It was. Look back here on the 4th of November. Went below, closed above, had a big move up. Does it mean it has to respect it? No, this time, no. But it's if it respected it last time, it's more likely to respect it this time. No pen, no pen. So I'm looking for some kind of intra-week rejection of the 300 or a bounce at the 300. I would definitely get long Etsy at that level, as long as it gave me a good risk to reward ratio. Home Depot. I am currently short Home Depot. But what level makes sense to me right now? Well, it's the 200. We have this upward sloping 200-week moving average. It's down there. I mean, it's down 273.30. It's down there quite a bit. But if it gets there, I will buy it for sure. Some kind of bounce of the 200, some kind of intra-week rejection of the 200. Again, that gets back to the patience factor. If it doesn't get there, I'm not interested. But looking at this chart, clearly I can look at it in 1 second and go, oh yeah, that level makes sense. There'll probably be some buyers coming in there. So that's what I'm looking for on Home Depot. I drew the line at the 200 on the weekly. Let's see what that looks like on the monthly, the higher time frame. Makes sense. Here's a -1 ATR channel above it as support. Totally makes sense to me. So next week, if we get some kind of rejection of the 200, I will be in Home Depot. INDA, India index. Well, we had a close under the 200 and then over 200, and it keeps moving up. Penny, no. I'm not going to buy it here, but if we can pull back to the 200, that makes sense. This came from a lower low. Close under, close back over. Lower lows tend to do this. They tend to bounce up and then pull back. I'm looking for a higher low rejection of the 200, which would probably more than likely lead to a longer leg up. So 39.07 is the level I'm looking for. If it keeps moving up, then I don't take the trade. If it comes back, has an intra-week rejection, then I get long. I drew the line here, 39.07. Let's look what that looks like on the monthly. Has the 50-week moving average or 50-month moving average underneath it. It's also a little higher than halfway of the V1 that happened the prior month. This all makes sense. Makes sense to me that we are having a bit of a pullback. So looking for a intra-week rejection of the 100, which would give us a higher low rejection of the 200. That would give me a potential on INDA. SSO, okay. We We had to close under, close back over the 200, moved up. Not interested in this unless we have a pullback, some kind of rejection of the 200, interweek rejection or bounce of the 200 to get me long. Tesla currently in this trade. However, and I did take some partial profits on the way up. If we come back, reject the 50, I could reload on this position, get back into a full position because I have taken partial profits. Well, but if I was not in this trade, I would definitely look for an entry with a intra-week rejection of the 200 or a bounce. And then VIX. Well, look at VIX. I really actually love VIX here because we have a double bottom bullish divergence in place. Here we have a low with deep red MACD bars. We rallied into green. We are coming back looking to test this previous low here. See how there's no red bars? This is a double bottom bullish divergence with a missing right shoulder. So, excuse me, an under 30, over 30 next week is what I am looking for to get long VIX, specifically because of this double bottom bullish divergence. So let's do a quick recap. AGQ, I'm looking for some type of rejection next week to get short AGQ of the 200 week. Etsy, looking for a rejection on Friday, the end of the weekly bar, at the 300 week moving average. Home Depot, looking for some kind of rejection to the downside of the 200. INDA, looking for a pullback, retest of the 200. SSO, looking for a pullback to the 200, some kind of rejection of the 200 to get long SSO. Tesla, looking for some kind of rejection of the 200 to get long. And then VIX, looking for VIX to go down, give us an under 30, over 30. So that's what I have there for the potentials on the daily and the weeklies. I did mention at the beginning of the show that I do teach private one-on-one lessons in the evening time via Skype. Listen, if you really want to learn something, the best way to learn anything is to do it one-on-one. I am convinced of this fact because I have taught so many people around the world, and they say, the one-on-one really makes the difference. So if you would like to learn how I trade, if you'd like to learn step-by-step how to trade everything that I do on all 5 trading approaches, please send me an email. Email's in the link of this description. If you do reach out and say, Greg, potentially interested in taking your course, I'll say, great. I'll reply and say, great. Let's set up a Skype call. The Skype call is completely free. It is not a sales call, not even in the least. I just want to learn more about you, your trading challenges, your trading goals. And it's a great time for you to ask me questions about the format of the course. And when we're done with the call, then it's completely up to you. And one day if you wake up and decide, you know what, I really do want to learn how to do this. I do really want to have a mentor, someone that's experienced, that's been trading for 28 years. And just write me back and say, Greg, I'm ready to take the class. We'll do it. And I promise you, you will be glad that you did because you will learn a skill. If you do like online courses, I do have a great online course where I teach you step by step how to trade the deep dip buy stock trading strategy. A lot of the strategies and a lot of the trades that I have here in today's podcast are deep dip buy strategies. Now, it's not as good as one-on-one, obviously, but it's still a really great course. There's 9.5 hours of video. There's 26 videos total. There's 15 study guides. And the best part, it only costs between $12 and $15 on Udemy. And the link is in the description of this course. And I've had so much good feedback and ratings and reviews on that course. If you're just getting started and you want a great place to start with a trading approach that uses great trading fundamentals in every aspect, check it out. Links in the description. If you like today's podcast, I really would appreciate it if you could hit the thumbs up button. It helps to build the channel. It helps to keep the channel around. It lets YouTube know there's some valuable content. And so if you've learned anything valuable today or in previous podcasts, I would just really appreciate it if you could hit that thumbs up button or share on social media. That would be nice as well. And then fourth, the most important thing always, everyone, if you could please try to go out and do one nice thing for another human being today, it would make the world a better place. If you could also go out, try to do one nice thing, one act of kindness for an animal, that would also be great and make the world. Could you imagine if we could just all do one nice thing for another human being and for an animal each day? Could you just imagine in the aggregate how much better this world would be? So I have this little platform here, not a lot, but I want to use it at least and try to put that out every day. Try to do one nice thing, one act of kindness every day for a human and an animal. And one day when you need it, hopefully someone will be there for you and do it as well. All right. So I hope you have a good weekend. Hope you get out, get some exercise, maybe get some rest, have some fun, spend time with your family, and God willing, I will do the podcast again next week, and we'll see how all these trades turned out. But thank you so much, everyone, for coming. Really appreciate you spending your time here. Hope that you're getting some dividends, or get dividends on learning how I approach trading here, and that it's helping you as well. If you have any questions or comments on anything I said here, please put them in the comment section. I'll do my best to get to them and reply. But enjoy the rest of your weekend, everyone. Thanks a lot. And Penny and I, after this, we're going to go on a big walk and get the ants out of her pants. This was an interesting podcast. Boy, she was at me the whole time, but it was fun. All right, everyone. On the way out here, I have to run the U.S. legal disclaimer. Take care of yourself, and hopefully we'll see you next week. Bye-bye.
U.S. government required disclaimer. Stock, options, futures, and forex trading is not appropriate for everyone. While there is a potential for large rewards, there is also a substantial risk of loss associated with trading. The material in this video or live broadcast is not geared towards any particular individual or to any particular financial situation and is not intended to meet the particular investment objectives of any viewer. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Any and all information contained in, implied, or referenced by this video or live broadcast is not to be construed as investment advice, and no representation is made that any individual or entity involved in production of this video or live broadcast is an investment or financial advisor or is registered or authorized to give any financial advice. We are publishers and educators only. Therefore, the various producers of this video or live broadcast will not accept liability for any loss or damage of any kind which may arise either directly or indirectly out of the use of any of this material, including any loss of profit. No representation is made that any account or investment will or is likely to achieve the profit or losses demonstrated. We recommend consultation with a licensed and qualified professional before making any investment decision. This video or live broadcast is not to be construed as an offer to buy or sell any security, financial instrument, or financial product of any kind. Notice is hereby given that any individual or entity involved in production of this video or live broadcast or their clients may have an interest in any security, financial instrument, or financial product mentioned or referenced. Any simulated or hypothetical performance result depicted does not represent actual trading and therefore may under or overcompensate for the impact of various market factors such as lack of liquidity. Thank you.